Timing is one of the most important elements of trading well, if not the most important element. You can have the direction right, but if your timing is off, you can still place 10 losing trades in a row. So in this video, I'm going to talk you through how I navigate timing when I'm trading the US 30 and the NASDAQ. The main thing that I use to help me in this area is the economical calendar. There are two parts of this. It's the days of the week and it's also the times of the day. So in this video, I'm going to talk you through exactly what I do to plan my timing strategically when I'm trading US 30 and NASDAQ. If you're excited to learn, hit the thumbs up button before we get started. And if you want to see more content like this, make sure to subscribe to Thinkmarkets now as well. So there are two things that you want to be thinking about when you're looking at the economical calendar to strategically time your trading. When I'm trading the US 30 and the NASDAQ, I'm looking at the day of the week and I'm also looking at the time of the day. So let's start with day of the week and then we'll look at time of day. So by day of the week, what I'm usually doing is strategically eliminating at least 2 days of every week to not trade at all, which means that I'll only be trading about 2 or 3 days of the week. Now, the reason why I do that, if you've traded the US 30 and the NASDAQ before, you'll be aware that on some days they make these really, really nice long trending moves and it looks like it's super easy. But then on other days, they are just a chaotic mess for the entire day and there's virtually nothing that you could have got out of it in any direction. And the good news is that some of the information we get in advance, which can help us to decide which day is going to be which. Obviously, you do get surprises along the way. So you might have an unexpectedly good day on a day that you thought was going to be bad, or you might have an unexpectedly bad day on a day that you thought was going to be good. But it's really important not to wear yourself out and give yourself decision fatigue by sitting in front of your computer for too many days. It's better to trade really well on 2 to 3 days of the week rather than to wear yourself out and burn out by staring at your computer 5 days of the week. Also, the more screen time you have, the more chance that there is that you might accidentally end up boredom trading or over trading or starting to see things that aren't there. So you want to really reduce the amount of time that you are looking for opportunities. I like to think about preparing for the trading session as though I was preparing for a 4-hour-long exam. So for example, I would never turn up to an exam if I hadn't slept well, if I hadn't eaten, if I was dehydrated, and I would usually make sure that I'd gone for a walk outside and got some fresh air first. And the reason we do this is that we can stay focused and that we can make good decisions in the moment. And very similarly, you're not going to book yourself in for 5 exams 5 days in a row, because by the end of it, you're going to be burnt out and you're going to be writing stupid things. In trading, you want to keep your screen time to a minimum so that you can really focus when it matters. You don't want to burn yourself out trading on the difficult days. How we do this, we look at the economical calendar. So on Thinkmarkets, I'm going to go to the economical calendar. And as I'm trading the US 30 and the NASDAQ, which are US companies, I want to be looking for the US. I'm just going to take off some of these other ones because I don't want them on there. Take off Canada and Japan. So what we want to look for is the really high impact news. We want to see what days they're on, and we want to eliminate the 2 days before. So for the US 30, the high impact news at the moment is CPI, NFP, and interest rates decisions. What's important to understand is that these do change, and that depends on what's important to people at the time. For example, if housing becomes a really big issue in America, then you might find that housing data becomes a key piece of news where the market's really reactive. Or for example, if jobs becomes a big issue, you might pay more attention to other jobs data other than just NFP. But at the moment, CPI, NFP, and interest rates decisions are the big ones. So you want to strategically eliminate the 2 days before each of these major news events. The reason for that is because traders are not likely to make big decisions 2 days or the day before a huge piece of economic data. They're more likely to wait until the data's come out to make their buying and selling decisions. So the 2 days before are often very difficult, and strategically eliminating them and saving your energy for the 2 days after is a much better use of time. So 2 days before NFP, 2 days before CPI, and 2 days before an interest rate decision, this can automatically get you 6 days off the calendar month. Other days that you would want to be looking for are when there are speeches. So when there are Fed speeches, central bank speeches, because speeches can make things very difficult. So you definitely don't want to be trying too hard on the day of a speech. You can also eliminate them altogether. The day of the news release itself can be very hit or miss. So I do like to turn up, especially because they're quite good days for drawing on key levels, but I don't want to overly commit if it's difficult. So I want to be prepared to walk away quickly if it is difficult. The next day and the day after are often a little bit easier than the day itself. So now let's look at time of day. So US data comes out at several times during the day. One of the key times is 8:30 Eastern time, which is 1:30 UK time. So this is an hour before the market opens. We get a lot of information coming out then. But also on some days, we get news data coming out 15 minutes after the open and then half an hour after the open. So you want to look at what the spread is of the news data, which is coming out over the trading session, because we usually get around 2 big moves in the New York session, and they will happen at completely different times every single day. And one issue that traders often make is perhaps they'll get in too quickly, too close to the open, when in fact the big move actually happened half an hour after the open. But by the time that happens, they usually feel a little bit deflated and disheartened. Perhaps they've taken too many losses at the start and they've said that they're done for the day, and then the market does make its big move. So you want to decide beforehand when you think the big move is likely to happen so that you can save yourself for that. So looking at the time that the news is going to be released is really important. As a rule of thumb, I would always say that I'm going to be waiting until the last piece of news before making a decision. The only exception to that would be if there was a really, really huge and significant piece of news which came out early and there was a particularly good opportunity early on, then I would want to close off risk on that trade before any subsequent pieces of news came out later. But on the whole, you do want to wait until the last piece of news. So if the last piece of news is coming out at 10 a.m. Eastern time or 3 p.m. UK time, then usually the big move is likely to happen after that time. However, if the last piece of news came out at 8:30 Eastern time or 1:30 UK time, then you're more likely to get a move that's happening closer to the open of the session. And the thing that will determine how close it will be to the open is how decisive the news is. So that's another factor that you want to look at. If there was loads of news coming out at 8:30 Eastern time and it was a mix of bullish, bearish, then that's quite indecisive. You're more likely to get what I call a chaotic open and a less decisive open, with the bigger move happening a little bit later on if it's all less decisive. However, if all the news that came out at 8:30 Eastern time was really, really, really bullish and that was it, then you're more likely to get a move closer to the open. So the 3 things you're looking for are the day of the week. You want to strategically eliminate days based on news data. You also want to look at time of day. You want to look at when the news releases are coming out, and you want to expect the big move to happen after the last piece of news. And you also want to look for how decisive the news was. The less decisive it was, the more likely you are to have to wait till later. And the more decisive it is, the closer it's likely to be to the open. So now you understand how I use the economical calendar to strategically manage timing when trading US 30 and NASDAQ. The next step is to head over to Thinkmarkets economical calendar yourself and have a look at the month ahead and implement what you've learned in this video into practice. What I also like to do is I like to actually print out a paper version of the calendar month ahead so that I can write down on a physical copy and keep it at my trading desk. This really helps me to plan the month ahead. So I do this at the start of the month, But it also means that if anything changes along the month, I can just cross it out and I can rewrite the new date in, and then I've still got it right there with me. I can also add notes to it as I go along. If you found this video helpful, make sure to give it a little thumbs up. And if you want to see more content like this, make sure to subscribe to Think Markets now as well.